After the Federal Reserve spoke about what they believe is the outlook for the US economy going forward, we also had the ECB, which raised its interest rates by 25 basis points, and now interest rates in Europe are at 3.25%, and this takes the combined rate hike to 3.75% or 375 bips since July of 2022, all in an attempt to tackle inflation. Further action is still likely, mounting wage and price pressures which continue in Europe. But at the same time, this is a slowdown after 3 consecutive 50 bips rate hikes, and this on the back of the biggest drop in loan demand in the Eurozone, according to the latest banking data. The central bank did not provide any guidance for upcoming meets, but let's listen in to what Christine Lagarde, the president of the ECB, had to say.
As the energy crisis fades, governments should roll back the related support measures promptly and in a concerted manner to avoid driving up medium-term inflationary pressures, which would call for a stronger monetary policy response. Fiscal policies should be oriented towards making our economy more productive and gradually bringing down high public debt. Policies to enhance the euro area's supply capacity, especially in the energy sector, can also help reduce price pressures in the medium term. In this regard, we welcome the publication of the European Commission's legislative proposals for the reform of the EU's economic governance framework, which should be concluded soon. According to Eurostat's flash estimate, inflation was at 7% in April, after having dropped from 8.5% in February down to 6.9% in March. While base effects led to some increase in energy price inflation from minus 0.9% in March to plus 2.5% in April, the rate stands far below those recorded after the start of Russia's war against Ukraine. Food price inflation remains elevated, however, standing at 13.6% in April after 15.5% in March. Price pressures remain strong. Inflation, excluding energy and food, was 5.6% in April, having edged down slightly compared with March to return to its February level.
All right, so that was the word coming in from Christine Lagarde, president of the ECB. But let's also look at other things that are making news globally. And Apple's first quarter results topped estimates, largely led by stronger than expected iPhone sales. iPhone revenue, which makes up for more than half of the total revenue, rose to $51.3 billion versus estimates of $48.8 billion. The tech giant also boosted its dividend and announced a $90 billion share buyback program.
Right, and let's move over from one phone maker to another. Samsung, an influential workers' union at the South Korean electronics maker, warns that members could walk out over wage disputes. This could be the first ever strike in the company's history. The National Samsung Electronics Union claims that the management has cut the union out of wage negotiations.
And the latest on the banking crisis. Reports suggest that UBS is reviewing plans to sell the Swiss banking business of Credit Suisse in an IPO after taking over its smaller rival. The plan includes potentially keeping the unit's investment banking operations while selling the rest. The plan is still at its nascent stages as UBS continues to focus on the takeover.
Right, and switching over to tech. US President Joe Biden met with top AI players, Microsoft and Google. The key agenda of the meeting was to ensure that AI products are safe before they're deployed. Biden told officials they must mitigate current and potential risks AI poses to individual, society, and national security. The meet included a frank and constructive discussion on the need for more transparency with policymakers.
And joining the many companies axing jobs, Swedish car maker Volvo has said it will eliminate as many as 1,300 roles as the company ramps up cost-cutting measures. Management flags economic headwinds, increased raw material prices, and increased competition as areas of challenge for the industry.